Hey everyone, and welcome to The Explainer. Today, we're diving into a massive, literally $6 billion shift that's happening right now, mostly behind the scenes in global healthcare. We're going to unpack the absolute boom in the automated dispensing machine market. And we'll be putting a magnifying glass on the leading stock that's driving this whole transformation. If you're wondering exactly where healthcare capital is flowing to fix these critical staffing and safety issues, well, you are definitely in the right place. Okay, let's just quickly glance at our roadmap for today. We'll kick things off with the healthcare automation boom, look at how the market segments, and map out global adoption. Then we'll zoom right in to meet the market leader, and finally wrap up with a financial snapshot of Omnicell.
All right, Section 1, the healthcare automation boom, saving time and lives. Let's look at the actual forces driving this urgent need for digitization.
So industry research points to, quote, increasing demand for medication safety and workflow automation. But, what does that actually mean in human terms? Right now, hospitals are just buckling under this intense pressure from massive medication volumes and really severe staffing shortages. So these machines are stepping in. They're preventing dangerous dispensing errors, providing automated verification, and locking down access to controlled substances. So this isn't just about saving money, right? It's about freeing up nurses and pharmacists from all those tedious, manual tasks so they can actually focus on what they do best, which is real, hands-on clinical care. And wow, does that urgent need translate into massive numbers? The global market size for these automated dispensing machines in 2025, it's valued at $6.02 billion. But here's the kicker. Driven by this huge mandate to just eliminate human error, the market is projected to hit nearly $11.4 billion by 2034. That is a really steady compound annual growth rate of over 7%. To put that into perspective, healthcare systems are literally pouring billions into these machines at a faster rate than a lot of consumer tech sectors. The demand is crystal clear, and it's accelerating fast. Moving on to Section 2, how the market segments, where the machines live. Basically, we need to figure out where exactly these robots are physically located inside the healthcare ecosystem. So we can categorize this massive market based on where these machines are placed. Centralized systems make up 55% of the market. Think of these as your massive high-capacity bulk storage units, the ones sitting down in hospital basements and central pharmacies. But take a look at that 45% for decentralized systems. These are the compact, super secure units placed right at the nursing stations, right at the point of care. And they are growing incredibly fast because they drastically cut down the turnaround time for clinicians trying to get the exact right medication to a patient's bedside, like immediately.
Now, if we slice the data a different way, by application, we see inpatient hospital care holding the majority at 60%. And that makes sense, right? Hospitals have super complex medication regimens and need the absolute highest levels of security and traceability. However, do not ignore that 40% outpatient slice. Outpatient applications are absolutely booming right now. As healthcare delivery models kind of evolve, more and more care is shifting over to same-day procedures, ambulatory services, and retail clinics. It's creating this massive new frontier for automated systems.
Okay, so we know what the machines are and where they go. Let's jump to Section 3, global adoption and geography. Who is leading the charge? Looking at how this all breaks down across different global regions, adoption rates actually vary wildly based on local infrastructure. North America is leading the pack by a pretty huge margin, commanding 40% of the market. Why? Mostly because of its highly advanced health IT infrastructure and this incredibly strict regulatory focus on medication traceability. Europe follows at a solid 28%, driven by really structured public healthcare systems in places like Germany and the UK. But you definitely want to keep your eyes on the Asia-Pacific region at 22%. With rapid hospital expansion and huge government digitization initiatives in China and Japan, this region represents some seriously high-potential future growth. Having established the macro environment, the massive growth, the shift to decentralized care, the North American dominance, let's pivot sharply to the micro-analysis. Section 4. Meet the market leader, the Omnicell pivot. Meet Omnicell. This company is the primary vehicle investors are using right now to play the healthcare automation trend. They hold a dominant 22% of the entire global automated dispensing machine market. They're the ones actually building and putting these high-tech machines into those centralized pharmacies and decentralized nursing stations we were just talking about. And just to give you a quick sense of the competitive landscape, Omnicell's 22% sits right at the very top, slightly edging out its closest competitor, BD, which holds an 18% market share. It is a highly consolidated space at the top, and Omnicell has clearly positioned itself as the outright leader in medication management. Which brings us to our final act,
Section 5, Omnicell Financial Snapshot, under the microscope.
So the really crucial point here is figuring out how Omnicell's market dominance actually translates into financial performance. They're sitting at a market cap of nearly $1.96 billion, generating an impressive $1.23 billion in revenue, with EBITDA hovering around $73.6 million. But I want you to pause for a second and look at that PE ratio of 97.73. That is exceptionally high. What that tells us is that investors are paying a steep premium right now simply because they have massive growth expectations for Omnicell's future earnings. Basically, the market is completely pricing in that automation boom we discussed earlier. And honestly, recent data supports a lot of that optimism. Looking at their Q1 2026 updates, Omnicell reported some really solid momentum. Their Q1 revenue jumped 15% year over year to roughly $310 million. They posted a GAAP earnings per share of 25 cents, and maybe most importantly, management actually lifted their full year 2026 non-GAAP EPS guidance. Because of this top-line growth and their market positioning, the stock currently averages a buy rating from a consensus of 9 covering analysts.
Now, this brilliantly illustrates the nuance in their profitability. Their recent filings reveal a massive difference between GAAP and non-GAAP net income. On a GAAP basis, net income was about $11.3 million. But when you adjust for non-cash expenses, things like share-based compensation and amortization of intangibles, their non-GAAP net income jumps to over $25 million. This really highlights an underlying operational profitability that is much, much stronger than the raw GAAP numbers suggest, and that is exactly what growth investors are looking for.
Which leaves us with this final thought. We've seen the incredible benefits, right? Reduced errors, optimized nursing workflows, significantly better patient outcomes. But we also know the initial implementation and IT integration costs for these machines are incredibly high for hospitals. So I'll leave you with this question to ponder. When you weigh that high upfront financial burden against the literally priceless long-term benefits of patient safety, is the automated dispensing machine market just dispensing a temporary technological fix? Or are we looking at the permanent, absolutely unavoidable future of global healthcare? Thank you so much for joining me for this explainer. I really hope it brought some vital clarity to this fascinating market. Catch you next time.